Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening with Tesla stock today once again, and really what it just means moving forward. So as usual, if you enjoy, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. That link is down below in the description of the video. For $3 a month, you get access to all my intraday thoughts, posts, updates, technical analysis, options flow, etc. on Tesla, sometimes other stocks, but obviously mainly Tesla by far. So yeah, if interested, if that's something that might interest you, the link, of course, for that is down below in the description. But jumping into a Tesla with another phenomenal day, moving up 10% on the day, closing just above $231 per share, which compared to the market is yet another pretty substantial outperformance as we got those delivery numbers this morning, and they were actually pretty good, right? And the market, of course, is rewarding Tesla with that, and it's kind of like playing catch up now a little bit, at least a little bit, to the overall market pretty much being like well into the all-time highs, or is it? Yeah, pretty much all-time highs right here, more or less added, right? Well, Tesla, of course, is nowhere near all-time highs still. I mean, the thing is, even after these beautiful moves today, or not today, but the past couple of days, Tesla is still technically down about 44% from all-time highs. So Tesla, even to catch up to all-time highs, still has quite a lot of work to do, right? From here, it'll be another move of what, like almost a double, about 80% move from here. So, just perspective, I guess, is interesting way to put it. Now, let's talk about the move, right? So today, obviously, we had a massive move, right? And I talked about yesterday how, usually when stocks like Tesla get moving, right, they give little room for, people to get in, I guess, if that makes sense, right? It's very good at making you feel FOMO. Like stocks like Tesla are phenomenal at making people feel FOMO. I used to feel it all the time way back when, right? I'm trying to be a lot more disciplined nowadays, but it's very good at doing that. And what I mentioned yesterday, if we do get a pullback, is the fact that honestly, I mentioned this several levels. I talked about how, we can come down to about 205 will be the first level. Below that, we have about $200 per share. And below that, we have about the like 191, 185, 187, something like that, right? Those are the three levels. But yesterday we mentioned how if we do get that pullback to the first level, 205, there's a damn good chance that's all we get. Why? Because, well, those red candles will get eaten up. Any of that pain will get eaten up. And the second people will see red, they'll be like, okay, cool, Tesla's finally beginning its correction. I'll get in lower. And then what it does is just it shoots back up and goes up even higher. That's exactly what we talked about yesterday. Go watch the video if you don't believe me. We literally mentioned that exact phrase, essentially. Obviously paraphrased slightly. But the reason I bring that up is because pre-market, before the delivery numbers came out, we did come down to 205-ish, right? You can see here, we closed around here, right around what, 210 or whatever it was yesterday. And then pretty much in the morning, in the AM, we did slowly slide all the way back down to pretty much 205, almost exactly. Retested that level pre-market, and then we shot up after the delivery numbers came in, and Tesla just pretty much skyrocketed 10% from there, more or less. So, we got that retest, and that was all we got. And now Tesla is playing that FOMO game. The market is punishing late chasers and FOMO, FOMOers, I guess, if that's even a word, right? So just keep that in mind. This happens many times, right? Kind of like the way Tesla punished all the people that down here that just got scared by this massive drop and then just shot up. I feel like the opposite is happening here, right? So there's a lot to talk about. Let's start off I actually want to start with the weekly really quickly here. So the weekly is important, and the reason for that is because this is where I have my overall trend line, right? This is that main like final boss trend line, right? And I have this set at a pretty specific level. I have this set so that it's touching the tippy tip of all of these candles at the top, right? You can even make it a little bit higher, honestly, but whatever, close enough to what I have here. Actually, wait, let me bring it up to what I had. I think it was something like this. The reason I bring this up is because on the weekly, right, it's easier to see than the daily, in my opinion, is again, the final boss trend line, the one that has essentially rejected us many times over and over, right? Many times. And well, we're pretty much right at it once again, right? You can see right here. You can even put it like this, or you can make it a little bit more lenient like this, I guess. But the point is, we're pretty much right back at that line right here, right now. And what we're doing right now is we're pretty much testing it, but we're not just testing this final boss trend line roughly. Again, my trend line, it's not drawn to perfection. It's not like, if you see a tiny bit of the candle go over it, it's like, oh my God, we're breaking out. No, it's drawn to a rough way, right? I don't have it to like the most pinpoint perfect, like candle touching, just like absolute, like pixel perfect to the cent. It's just a general guideline, right? But the point is we're pretty much around that level, right? We're at a pretty important resistance point, right? And I'll say why. So first of all, trend line, that's number one. The multi-year trend line. We're at it. We'll see if we reject. I expect us to reject. Obviously, whether or not we actually do reject is still the question, but we are coming into increase in volume, right? You can see here, right? We had a massive volume here, and now we're pretty much right at another massive volume spike, the volume profile. a pretty large gap in between that, and we pretty much just slid right through that, straight north, right into the next volume profile, and we're pretty much entering a massive area of resistance starting at 230. I'm sure you remember way back when we were still trading here, the 230s, the 240s. There was a lot of trading happening in that area. There's a lot of volume happening in that area, as shown by, as clearly you can see, the volume profile on the right over here. So we're going right back into it. So I expect a lot of supply starting at 230, with the next level being pretty much 245 and the next level being 265. I expect a substantial amount of selling pressure within this general area. But I also would not be surprised if we do reject somewhere around this general level right now. You can see Tesla selling off a little bit post-market. It's probably, I really think it's going to start punishing the FOMOers and the late buyers. Doesn't mean we can't go higher. I want to make it very clear. There's no top signal for Tesla. It's not showing anything that makes it seem like it's going to just crash from here. It's not showing any of that. But if there was a place to form a top signal, that's the important part, to form a top signal, this roughly would be it. We'll see. We'll see. There's obviously still time, and we'll decide that, right? The next reason is because, well, the 200 moving average on the weekly time frame, this green line right here, pretty much exactly where we closed the candle out today, right? Obviously, this is a weekly candle. There's still more days of the week. Granted, tomorrow is a half day, Thursday is closed, but we still have tomorrow, half day, we still have Friday. So there's still more time in this week to see how this weekly candle actually closes. If we do close well above 230, right, like maybe 232, 233, on the weekly time frame, which will be above my 230 resistance point, which will be above the 200-day moving average, or weekly moving average, if you will, and the 230 resistance point, that could be pretty promising. That actually could be promising, and it could mean that, before we cool off, we actually head even higher. We head to 245. That'll be the next main level. If we break above that, then honestly, we head to 265. And 265 is another crucial level, right? We talked about this yesterday, and I said how yesterday, right? Let's go back to the daily chart here quickly. We talked about yesterday how breaking above 205 essentially is a medium-term, change of character, is a trend break, right? Breaking that downtrend on the medium time frame, right? But the real test, the real way to really get Tesla, in my opinion, to really break the long-term downtrend, number one, of course, breaking that red trend line we just talked about on the weekly chart. But arguably, all that would do is just show that the trend downwards, the steepness of it has slowed down substantially. That's all that would show. What I really want to see, though, the real thing that really makes me convinced that Tesla, at the very least, is going to all-time highs, or like to retest previous all-time highs, if not make new all-time highs, is breaking above 265. This was the level that substantially rejected us, and this was the level that started this substantial, pretty steep downtrend. The reason I want 265 to break also is because, in my opinion, this was on a longer time frame, and more like like a weekly time frame even, this was pretty much, honestly, that last major higher high, like the major higher high that was set. A break of this level breaks that higher high. We set a fresh higher high off of a major pivot point, and that to me is a major trend shift long term. So if I ever see Tesla break above 265, on the weekly or the daily, just at some point, that's very bullish. And I think the long term now has officially also been changed to the bullish side. The bulls, in my opinion, have completely regained control of the stock. And in my opinion, at the very least, retesting all-time highs at some point within the next year or so, 2 years. It's in the cards. It would be absolutely in the cards, no questions asked. That's the way I look at it. But regardless, those are the main reasons I'm looking on the weekly chart as of right now to be an area. If there was an area to reject, it would be this area. Also, if we go over here on the right side, you can see, right, there was quite a bit of dark pool volume that occurred today on Tesla stock. The main one I want to pay attention to, or have you pay attention to, is this one here, right? It occurred at 11:30 a.m. There was a massive dark pool block that came in at the price of pretty much $230 per share. So that's roughly going to be acting as a resistance now, even though we closed above it. But obviously, 1 day candle is not, it's not a trend, it's just a 1 day candle. We'll see how we continue, right? But the reason I bring this up is because there was a 459 million dark pool block that came in. Obviously, with dark pools, you never know if it's a sell, if it's a buy, or whatever. You kind of just assume. But the second this hits, Tesla has been rejected by pretty much 230 the rest of the day. We barely closed above it, and we're kind of selling down roughly to it, if not below it, post-market right now. So we can assume that this is most likely a sell, especially after a pretty substantial run-up Tesla has had the past few days, right? You can only assume that it's most likely a sell in the dark pool. So just keep in mind, that's a pretty substantial block, right? Someone clearly with very deep pockets is exiting at least maybe all their position, maybe some of their position. We don't really know the full story, but just something to note that this level, in theory, should act as most likely a form of resistance, right? A lot of bearish flow that came in throughout Tesla as well. You can see Tesla only ended with 10 million bullish flow today, right? That's not too much considering how much overall calls did come in today. But, what to me this tells me is the fact that a lot of those calls are being taken for profit. And again, it's not completely uncommon, right? When Tesla runs the way it did run the past even 2 days alone, just the last 2 days, even if you missed this whole run up and you bought in, a $200 per share, you're already up a very, very sexy amount of what is this, about like 17-ish%. Beautiful, beautiful return in 2 days. That is astronomical, right? So keep that in mind, right? Other things to watch out for Tesla here, of course, right, is going to be, so by the way, on the daily chart, you can kind of see this, this area that I'm talking about. That's going to be, in theory, an area of supply, this general vicinity that we're in right now, right? That we're pretty much touching right now. This area should be a massive area of supply in theory. We'll see, of course, if it is or not, but it should be. We'll see. But on top of that, we have the RSI pretty much extending to substantially overbought territories, right? Very, 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 very overbought. Now, of course, Tesla has been more overbought than this in the past, right? For instance, over here, we went to all the way the level of 93. Here we went to about 94. Here we went to about 88. Right now, we're sitting at about 81, we'll say. So there's still technically more room to run just because it's overbought. It doesn't mean it has to like crash right now or tomorrow. It can. Doesn't mean it has to. There's no top signal. But we are starting to enter territories of being pretty substantially overbought, right? So we have that. The stochastic is also entering very substantial levels of overbought right now, right? Pretty major levels as well. Again, doesn't mean we can't run up even higher, but just, FYI. Again, it's all about probability. It's all about the risk versus reward. Let's say if you're someone that hasn't entered a position at all, and you're looking at Tesla right now sitting at 230 after this run up for the past 2 days, and you're thinking, you know what? I want to enter a position. I want to enter a position. I want to buy right here, right now. That's your choice. That's your money to make. But, the risk versus reward, even though it can run up further, and even though there is the possibility it goes up to 245, in my eyes, in my opinion, that risk versus reward is just not there, right? It's just simply not there. It's just very, very high risk to, bet on it continuing up even further, even though it can, but with, without at least some retrace, some cool off. Now, another thing to look at, of course, is going to be the fair value gaps, right? Today on this move, we did pretty much fill this fair value gap. You can see here on the red over here on the left side, right? We have more up here, for instance, around 245, pretty much that resistance point, and a couple above that as well. But we also have some pretty major fair value gaps now below us after these several gap ups that we've had the past few days. I don't expect to fill all of these, especially not anytime soon, but I do at the very least expect to fill the most recent one at some point. I don't know when. Could be tomorrow, could be Friday, could be next week. I have no idea, but I do expect at least to fill at the very least this one, which at the very least will bring us back down to about 212. Personally, again, I don't know when that's going to happen. I'm not someone that's going to try to time it. I'm not buying puts. I'm not shorting Tesla, especially now with these kind of candle closes, even though I do think it should start topping out around here. There's no signs of that just yet. Besides, I rarely short, especially Tesla. But again, I expect these levels, at the very least, this first fair value gap to fill at some point roughly within this box, somewhere in this rectangular box, probably around 211, if not to as low as 205. Worst case scenario, worst case, I say $200 per share. Those are the levels I'm currently expecting as of right now for Tesla stock. So we'll see how that actually plays out. But ultimately, that's kind of the main thing I'm looking at right now. The Darkpool volume, the 200 weekly moving average essentially sitting in the green line, the overall trend line resistance sitting all the way up here. That's important to note, right? And on top of that, one thing to note as well is we are having this massive move on very, very, very strong volume, which is a good sign. That to me tells me this move overall is not a false move. It's not a fake move. It's a true bullish move. It's a phenomenal looking move. Now, granted, it could be a short squeeze, of course, and it probably at some extent is, but it still shows that this move has merit to it, right? It's not just something that's just kind of happening for no reason or whatever. There's merit and weight behind this move. However, most people confuse this, and this is something I'm actually learning myself. Usually when you have these massive moves, whether it's up or down on this kind of elevated volume, it's pretty often that you get a retrace in the opposite direction not long after. For instance, you can see here, we had massive sell-off, and then finally we had a massive sell-off on very, very elevated volume. And what do? We retraced that sell-off the next 4 days roughly. You can see here, we went all the way from 182 to about 195 as an example, right? Same thing here. When we had that, remember the China news with FSD that came out, right? And we gapped up twice. This was earnings. Then we had the China news. We gapped up all the way over here to 190s, right? Also, elevated volume. What do we do right after? We retraced. Same thing, right? Now we're also gapping up and moving on elevated volume. I'm not saying it has to, but usually when you have these kind of moves up or down, you usually have on these volumes, you usually have the opposite move happen, at least for a short while. It doesn't have to be an extended one. It doesn't have to even be a crazy one, but at the very least, some movement in the opposite direction for some time. So we'll see if that actually plays out. I'm not saying it will, but again, in terms of probability, it should. And the final thing I'll talk about, of course, is my favorite indicator, the bands regression. Again, and I said this many times, once we break out, we will stay overbought for an extended period of time. I said that many, many times back when we were still trading in the 180s, the low 180s. I kept saying that a breakout, most likely we will be overbought for longer than usual, especially on the 1 hour time frame. We've been like that for quite some time on the 1 hour time frame. The daily chart, by the way, now is extremely overbought, like very, 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 the bands can't even keep up. That's how overbought we are, right? Again, doesn't mean it has to cool off and, reject right here, right now and crash. But, if there was a place to do it, in my opinion, this is it. Again, so you kind of want to zoom out on how often does Tesla get to these elevated levels before a retrace? Not often, right? Usually when it gets to these levels, if ever, it retraces pretty quickly. Now, of course, there's exceptions, right? For instance, here, when we gapped up like this, it did have a retrace the day after and kind of cooled off a tiny bit, and then it continued higher, right? Which is what we could potentially have. Or even here, when it, gapped up and it started just hugging the red line for an extended period of time. So Tesla can have these anomalies like NVIDIA had or whatever. These can happen, and this could be that. But again, it's about sticking to your rules, it's about sticking to your plan, and it's not about relying on these anomalies that happen, once in a blue moon, which they do, especially with stocks like Tesla. It's about consistency. And personally, just my opinion, just the way I trade, when I see something like this happen, the chances of us continuing much, much higher from here, even though they can happen, are becoming much less of a, the percentage of it happening, of occurring, is just lower and lower and lower, right? At least in my eyes, not something I would bet on. I wouldn't go in here and be like, yeah, I want to buy calls expiring in a month. That's just not something I personally would do. Some people would. If you make money on it, phenomenal. I wouldn't, because I try to be a little bit more risk averse than that. But with that being said, again, we're just extremely overbought. And at this point, it's getting like kind of ridiculously overbought, like laughably, comically overbought. So I expect a bit of a cool off from here as well, especially on the daily chart. I don't expect us to just crash back down to meet it down here at about 188. It can happen. I'm not saying it won't, but I don't think it will. But I do expect a cool off at the very least to come down to about 211, maybe even as low as 205. And in my opinion, as of right now, I think the quote unquote worst case scenario is $200 per share as well. But yeah, that's kind of the main things I'm looking at right now, ladies and gentlemen. So let me know what you think down below. I still think Tesla overall, the chart looks phenomenal. Medium term, it's very bullish. I can't imagine it not being bullish, but it is very, very overextended and very, 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 very overbought. So we'll see how the market reacts to these things, right? We'll see if it's punished the FOMO chasers and people long enough or not. And we'll see just how it decides to go from here. But again, personally, I think the upside move from here is just not favorable to bet on, in my opinion. Just my thoughts, of course. But all in all, thank you so much for watching. And as usual, I'll see you for the next one. Long video, but yeah, thanks for watching. Peace.